Hi everybody, this is Peter Schiff. This is Friday, May 1st, 2009. Welcome to the video blog. First, let me comment a little bit about the markets. As I've been discussing, the dollar has been weakening and another down week for the dollar. We've seen a lot of strength in the commodity currencies. Look at the strength in the Canadian dollar, look at the Australian dollar. And despite a rate cut in New Zealand, the New Zealand dollar still, I think, was positive on the week. So the dollar had a down week. It continues to follow lower after that outside week that I talked about from a couple of weeks ago. Also, not only is the dollar weakening, but the bond market is weakening. Look at the yield on the 10-year. It's now at 3.2%, or just under 3.2%. This is the highest yield on the 10-year bond since October of last year. And remember, back in December of last year, around the time that the Fed announced that it was going to begin monetizing more government debt, the yield on the 10-year got down to about 2.1%. We're now at 3.2%, a 50% increase in long-term interest rates. And as I wrote and as I said at the time, that was a major sell signal for the bond market. Because when the Fed is buying bonds, it's making bonds less valuable, not more valuable. Because in order to buy those bonds, it has to print money. And when it prints money, it debases the value of the dollar, which is precisely what bonds promise to pay. They represent future payments of dollars. And so if the Fed debases the dollar, bonds lose value, bondholders have to demand more interest to accept that additional inflation risk. Also, in global stock markets, the U.S. stock market, I think, was relatively firm on the week, but compared to the foreign markets, the U.S. market is standing still. Foreign markets continue to way outperform the U.S., especially when you factor in strengthening foreign currencies. And I think this has turned the tide. You know, in the latter half of 2008, it was the relative outperformance of the U.S. market to foreign markets and the strength of the dollar that led a lot of people to believe that decoupling wasn't going to happen and that the U.S. economy was actually in better shape than the rest of the world. That is absolutely not the case, and I think actions in global stock markets and in global currency markets are beginning to bear that out. Now, I also want to talk a little bit about the political news and what's going on with Chrysler. You know, Chrysler now today filed for bankruptcy. The government tried to broker a deal that would avoid bankruptcy, but many of Chrysler's creditors objected. And it's very interesting. If you look at the way President Obama is trying to vilify the hedge fund managers or mutual fund managers who are legitimate creditors of Chrysler, who didn't want to agree to the terms that the government was trying to force them to accept. And now President Obama is vilifying them. He's referring to them as greedy speculators. I mean, why are they speculators? They're bondholders. And maybe some of them did buy the bonds as a speculation, but that's their right, and they have legitimate rights. And the president shouldn't criticize them because they didn't want to accept the government's terms. And it's interesting that the government is pointing out that many of the major banks are willingly accepting these terms. Well, I would take issue with the fact that they're willingly accepting it. Remember, all of these banks have been the recipient of government TARP money. That money has corrupted them, and it is influencing their decisions. In fact, the government has a lot of influence over the recipients of this TARP money. And so I think it's very interesting that the creditors that got TARP money are in favor of what the government wants to do, but the creditors that didn't get TARP money are objecting to it. In any case, we're finally now in a General Motors bankruptcy. But I think it's going to be a sham bankruptcy. It's a mockery, mockery of a sham. I think the government's going to be in there influencing what the creditors are willing to accept, influencing the bankruptcy court. And I think that what we're going to have is not an efficient bankruptcy process where a money-losing company is purged from our system, where resources are more effectively allocated to other people, so that Chrysler's automobile infrastructure, its equipment, could be reallocated to people who might be able to employ it efficiently. And so skilled automobile workers would be able to be reemployed without onerous conditions imposed by unions and union contracts, that a non-unionized competitive Chrysler could reemerge, or whatever the name is going to be, and we can put skilled labor and capital to use effectively to produce cars at a profit and to grow and expand our automobile industry. Instead, I think this is going to be a phony bankruptcy. I think that the Chrysler that emerges from bankruptcy is going to be just as defective and deficient as the Chrysler that went into bankruptcy. Sure, they're going to have less debt, but I think they're going to preserve the conditions that led to that debt. They are going to entrench the labor unions, not only in control of labor, but in control of management by having potentially a majority stake or a significant stake in the company. But I also think the government is going to be highly involved in the decision-making and the management of companies like Chrysler. So now Chrysler is going to be run by a combination of the U.S. government and the labor union. And that is not going to be a recipe for an efficient automobile industry. It's a recipe to turn a Chrysler into another Amtrak or another post office. That's the last thing we need. You know, I've already read that in this interim process, the government is now guaranteeing Chrysler's warranties. I mean, look at how much trouble we got into when the government guaranteed mortgages. Now they want to guarantee more stuff. Now they want to guarantee warranties. We don't want the government guaranteeing warranties. Now, what kind of crazy warranties, I wonder, that Chrysler is going to come up with, because now it knows that the U.S. government is going to guarantee them. It doesn't really have to, they don't have to make viable sense. But the problem is the government has learned nothing from its mistakes. It's going to get more involved in the economy. It's guaranteeing more things, and so it's distorting more decisions. You know, maybe there will be some people who will be attracted to a government-guaranteed warranty. Maybe Chrysler will pick up some extra business at the expense of General Motors. Of course, by the time General Motors gets into bankruptcy, its warranties are probably going to be guaranteed by the government as well. But the problem is we don't want the government involved in these decisions. We want bankruptcy to go through the normal channels without government interference, and we want an efficient reallocation of capital and resources, including and especially labor. But what the government is trying to do under the guise of preserving jobs is entrenching that labor. The whole idea about bankruptcy is not to preserve jobs. Maybe jobs are going to have to be lost. Maybe there are too many people employed in that particular company. We can't say the goal of this bankruptcy is to preserve these jobs. Now, obviously, if people lose jobs in this bankruptcy, it doesn't mean that they can't find jobs someplace else. Maybe they will, and ultimately they will. The main reason they probably won't is because of government interference in the economy that's stifling innovation, that's stifling growth, that's starving companies of capital by usurping all this capital for its own purposes to expand the size of government and to prop up companies that would be better off in bankruptcy and would be better off failing. Anyway, that's it for today. We'll see what happens as this story continues to emerge and unfold next week. In the meantime, have a great weekend, everybody. I'll be back again next week.